Simple can be harder than complex. You have to work hard to get your thinking clean to make it simple, but it's worth it in the end because once you get there, you can move mountains. Steve Jobs. Let's break down what Steve was talking about. Simple can be harder than complex. In other words, focusing on what is real, focusing on reality. You have to work hard to get your thinking clean to make it simple. Now think about that. You have to disregard all of the things that aren't real, that aren't simple, that aren't clean. You have to get rid of them all and focus on what really matters. And what do you have because of doing that? Well, it's worth it in the end because once you get there, you can move mountains. And what we are talking about is getting rid of the mountains of things that confuse you, cutting them down so you can see what is beyond them. You can see the truth. Every day that you fill your mind with what you hear from the news media, their goal is to keep you attached. That's why they have all the graphics, all the news, all the breathless reporters that are beautiful with their makeup on, behind cameras with special lighting, is to keep you enthralled and to not get you to the truth. The truth they want from you is to buy their products, is to support the people that pay them through the advertising. That is what drives them in the end. Look at their motivation. What is your motivation? Your motivation should be to seek the truth. What is the truth? The truth, my friends, is price movement. That's all that matters. We see price movement in one place, on these charts. And the better your charts are, the cleaner, the more simple, the more austere, the more real they are, the better off you are. Weekly vertical crossovers, nothing is better than them. I found nothing better than weekly vertical crossovers when the price percent oscillator, which is a percentage version of the MACD. I'm going to put that PPO training at the end of today's video. If you're listening to us on our popular podcast, then simply go to the website. You will see the video there, or you can go to our YouTube channel. And at the end, I'm going to attach it as the end note. You're going to have the training on the price percent oscillator. Now, we have a great training for you today on Pearson's Law. That's inside the show notes for all of you who are subscribers. How do you become a subscriber? Go to chartingwealth.com, sign up for free. Pearson's Law, what does it teach? It teaches you that if you don't write it down, it didn't happen. That how important it is to record things and to report them back, because that increases your learning and your accuracy exponentially. Why? Because you're holding yourself accountable, because you're putting it down in writing, because you're making it real. And that's what we focus on here every day. Reality is job one. Let's jump into these charts. Everything up for the day on our four big charts: the S&P, the Qs, the Nasdaq 100, which is the Qs, 20-year bonds, and gold. Everything up. Let's see what there is to see. Look at the S&P. High so far this week, with 4 days now accomplished, one left. 339.61. What was the high last week? 338.28. We've had a higher high. We have a decent sized green up candle with a wick on top, no wick on the bottom. Price above the weekly, above the 2-day. Price percent oscillator heading up, losing a little bit of energy, but still going up. Derivative oscillator gaining upward momentum. 2-day chart. What do we see going on? First day of the latest 2-day candle. Remember, the last one finished drawing on Wednesday. So this is the first day. We have a red spinning top. Now we had an up day, 0.31%. But what do we see happening? We see a bit of a warning sign. We dropped through the 2-day trend line, still well above the weekly. We see the price percent oscillator just above the red signal line, heading down a little bit. Derivative oscillator peaked all the way back on the 17th. So pay close attention to what happens on Friday. Are you going to have a crossover going down that would pull you out of your weekly trade? That is the weekly vertical crossover, the 2-day recross. Now remember, that weekly vertical crossover has gone up and down as far as the 2-day chart goes. We had a 2-day recross. That's what got us into our latest trade back on the 2-day candle ending Monday, the 3rd of August. It has gone up quite nicely, jumping in point somewhere around the 326.50 mark up to a high, I guess, of 339.61. So again, just be cognizant of what's going on. If that 2-day does cross over going down, we've already violated the 2-day trend line. We're above the weekly, but that would be a good reason for taking your profits if there is a crossover. If there's not, it bounces off and keeps going up. Hey, more power to you. We'll watch. Look at the 4-hour chart now. We can redraw this a little better now. I'm talking about the 4-day trend line for those of you who are listening and not tuning in. Let's draw that a little closer. This is how easy it is for those of you watching to actually draw things on our TC2000 chart. But we do see price is below the weekly, the half day. I've got to get used to saying half day, not 4-hour. The half day trend line. Saw things down in the morning trying to garner up some movement in the afternoon, which it did. 1.39%, but as we look at our Heikin Ashi candlesticks, we can see how much pressure there was pushing down. Price did end up above the 2-day trend line on the half-day chart, but that price percent oscillator still heading down, still negative. Derivative oscillator gaining downward momentum. That was from all that momentum in the down movement in the morning on Thursday and also on Wednesday afternoon. So that's where we are on the S&P. Let's leave the S&P, go to our other stock index. This is the Nasdaq 100, the tech stocks. What's it doing? Well, we see that price percent oscillator actually kicking up, not devolving. We see a nice big green up candle well above the weekly trend line. Derivative oscillator looks like it is flat or maybe gaining a little bit. Go to the 2-day. What's it trying to do? It's trying to cross over going up. Is it going to be a 2-day recross at the close of the market on Friday? Maybe. Mark your show notes or mark your daily market worksheet and say, hey, I need to be watching that tomorrow around 350 in case you have a potential jumping in point for a practice trade on a 2-day recross. Not our favorite. Our favorite are weekly vertical crossovers, but it is an opportunity. We'll keep an eye on that. Now, that's where we are. Derivative oscillator heading up. 2-day looks like it's trying to cross over. Half day, we see some down pull in the morning, up in the afternoon, pushing up through the prior half-day trend line well above the weekly. Waiting to see if that 2-day is going to cross over. We do have the 4-hour moving in the right direction. Half day moving in the right direction along with the weekly. So keep your eye on the prize. Now we move on to bonds. Up 0.90% for the day. We see a down week still forming. The lowest this week was 163.30. The prior week, 163.16. So we've not hit the low the prior week did. We do see the price percent oscillator continuing to pull away from the red signal line, lost a little bit of that downward momentum. The derivative oscillator is negative. We go to the 2-day chart. Now we had that 2-day recross going down, had 2 good down candles, 4 days of down movement. What do we see going on now? Well, we saw things bottom out. We had a slowdown in the down movement, but the first day of this latest 2-day candle, we've seen where things have bottomed down and started to move up. We have a green open box candle. It's a little one, but we can see how much energy has been shaved off the down angle on the price percent oscillator. Derivative oscillator slowing down in its down movement, but still moving down. And we've seen price pop through the 2-day trend line. That's something to pay close attention to if you're still in that 2-day recross. Now look at the half-day chart. We had things cross over in the morning, slow down in that up movement in the afternoon, So again, we'll continue. Now we did have a crossover occur, so we will redraw the trend line, and that is the half-day trend line. So again, we have that up movement, so we'll continue to watch, see where that leads us. If you're in that 2-day recross still, do pay close attention as to what's happening with the 2-day chart and that weekly. Now again, the weekly is still moving down decently. 2-day, pay close attention to that, and we'll see how that trade continues to develop. Lastly, we go to gold, up 0.69% for the day. But look at what our Heikin Ashi candlestick shows us for the week. It shows us a doji. Lots of indecision tending down. Price percent oscillator heading down just a little bit. Looks like it's a little less than, I think it looks like it's a little less than flat. Derivative oscillator losing momentum. Go to the 2-day chart. Of course, we had that 2-day recross going down, and that was somewhere around the 185.50 mark, something like that. Price percent oscillator heading down, pulling away from the red signal line. Derivative oscillator gaining downward momentum. Red down candle forming just the first day of the latest 2-day, but it is pushing through the 2-day trend line that it had popped above. So again, we'll keep an eye on that. And as we look at the half-day chart, we can see, oh, that's getting all messy with all these lines. Again, it's just slow. All of that is showing a fair bit of sloppiness in movement. But what do we see? We look at the half-day chart. We had that crossover in the, what is that, in the morning, and then in the afternoon, accelerating down on Wednesday, down in the morning on Thursday, and up some in the afternoon, still negative. So we'll continue to watch, see what there is to see and to learn here, and continue to follow gold. Want to see if it's going to gather up some steam, try to move up again, but we have seen this 2-day down movement. Now again, if I misspoke and said a 2-day recross, I apologize. I'm not sure if I said that or not, but as I'm just again checking my notes and making sure, remember, we don't have any 2-day recross. We have a 2-day crossover going down. A recross is only when things have been moving in one direction. With the weekly on the 2-day chart, it goes in the opposite and then recrosses back up in the same direction as the weekly. That is the same direction as the weekly vertical crossover. We would have a 2-day recross if gold actually turned around and started heading up. That would be the 2-day recross. Sorry, if I'm not sure if I misspoke there or not. But as I do this on the fly with my notes here beside me, I want to make sure that I don't misspeak for you. Folks, that's where we are as we end the day. So appreciate you being with us. Hope you're doing your practice trades, filling out your daily market worksheet, weekly market worksheet, and trade worksheets. Always important. Appreciate you being with us. Don't have a copy of our book. Need to supercharge that training. Glad to get one to you. Follow the link in the show notes. Wherever you are in the world, we'll get it to you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.